Alright, hi everybody, welcome back to the channel. Today we have a very special pattern for you. You see, one of my favorite pattern that literally for those of you that like to buy, some are short sellers, some are buyers, but this is a powerful pattern that leads to a massive continuation later on. But let's dissect this move step by step. I think for you to understand it and have an edge into the market, I think it's important to read the market. It's important to understand what buyers and sellers were actually going. So as always, let's start by hiding these four candles and the other candles, and let's start with this pattern here, right? So this one is very interesting actually, because imagine you coming up and then you're seeing this, right? So as always, as you know, this orange line here is the EMA 7, so the exponential moving average for the last 7 candle, and the purple one is the exponential moving average for the last over the last 21 candles. So these two patterns here give us an idea of where we came from, right? So market direction. So it gives you an understanding of overall market direction, right? So let me put it here. It gives you and should I say long-term, right? Long-term market direction. So it means we come from somewhat something bullish, right? Because we see that this curve is going up, and we also see the same thing in the short term. So in the short term, let me write this here. So in the short term market direction, we've seen some degree of increase, even though the slope is quite small. But I'm talking about this area here, so maybe I should highlight it for you, right? So I'm talking about this region here. Should we make it transparent? Right, I'm talking about this region here, right? So the slope is going up. We come from a short-term market direction that is increasing slightly. So this is very important information, right? So let's get rid of this. And what we see a red candle, but a red candle that literally shows balance, right? So we see the same size of wick all the way up here, literally the same size almost down. So it's almost like a perfect candle, right? So it is a bear candle, which means we opened at this level here. So this is where we opened, right? And then we closed down here. We came and closed down here, which means in this particular point in time, let's assume that, I don't know whether it came from a bull candle here or not, it doesn't matter. But here sellers were in control, and sellers were in control, but nevertheless, it's a balanced market. So let's write here balanced. It's a balanced market, right? Because sellers and buyers were fighting for this price, and it turns out that actually sellers won, but the market is balanced, right? It is a typical range. So nothing, to be scared of here. It's a balanced market. Sellers are in control, it's true, but buyers are also in this market. Let's see what happens next. So if we move next, very interesting. Look at what we see here. So we see another kind of should we call it a doji? Not purely doji, but it is a candle that signifies a level of balanced market as well. So let's call this one balance. Why is it balanced? It's because over this range we can see that there's been a lot of exchange of price here. So lots of transactions have occurred, buyers buying, sellers buying, and the price hasn't moved much, even though the range has shifted downward a little bit. You can see this was a previous high, and then for the next period, this, if you think of this as a daily candle or hourly or monthly, doesn't matter, but you would see that the next period, let's assume that it's daily. On the daily one, we got the price was not as high, so it means that the range has shifted downwards. So let me put an arrow here for you. You can see that this is what we get, right? So we're shifting downwards, right? So that range is shifting downwards. So nothing special. The range is just shifting downwards, but we still in the balanced market. But notice this. At this bottom here, we see that we came and tested the 21 EMA. We tested the indicator for the long-term market direction. And the moment we tested it, there was immediate rejection by the buyers. So the buyers came in and bought that price, which means that the liquidity was basically swiped, right? So there was liquidity here, there was some buyers here. When the price went down there, they started buying it aggressively, putting the price all the way back up, nevertheless in the range. Now, what if we do this? What if we move to the next candle? What do we see? Very interesting. Look at this. Look at this. So price goes in a balanced market, but we get another balanced candle, right? So we see another balanced candle. The size, the full size of this candle is pretty much the same as the previous candle, which is even more interesting, right? So we close here, we open here, and the price just slightly goes below. When the price goes below the EMA 21, it gets rejected straight right away. So buyers start buying it, and likely, as you can see, it could be institution, right? So buying these positions here. But something that I want you to pay attention to is you can see this decreasing trend here, right? So let's change the color here for a minute. I think it's important to analyze this like that, which is I'm changing this color for a minute here. So this is decreasing. What do you think is happening? So sellers are selling aggressively into this market. They're not getting anywhere. Every time price comes to the EMA 21, it gets bought back up immediately. The sellers try again. They try hard. They try selling below the EMA 7. Price goes right below the EMA 21. It gets bought back up, right? So this is a very interesting thing. So what we can expect is for sellers to start putting some sort of what should we call it? Should we call it let's do this, some level of stop losses, especially for retail traders, right? So the guys that came into this market, they're like, actually, we think, let me do this, right? Should we make it transparent for a minute? So it's a bit clearer. Give me a minute here. I just wanna, okay, fine. So let's do this, right? So at this level here, we have sellers that are waiting with some stop losses somewhere here, which means if institutions start buying this market, what is likely to happen is that it might actually take away all of these stop losses that were here. It's true that at this level even, you can have sellers trying to sell at this price, but something you need to notice is that there's been a decreasing high over these 3 consecutive periods. The high has been decreasing, so it's fair to assume that there's going to be some stop losses at this level here, because sellers are not getting anywhere here, right? So if the price, either we get another balanced candle, or if the price shoots up, it's getting all of these stop losses away. So institutions run into them and get them stopped out. And rightly so, that's what we see here. So basically, you can see that this candle here has on its own swallowed up 1, 2, 3 balanced candle, right? So at this point, it's fair to assume that this is a breakout, right? So we've got a green candle that closed above everything down here, above the high of everything down here. So it's fair to assume that at this point in time, all of these stop losses have been taken out. And what happens when you get stop losses taken out? You get fuel in the fire. So basically, you get what is a stop loss for the sellers? It's actually buy order. So what you get now here, actually buy orders, right? So this turns out to actually be buy orders. Now that we've closed above this, it's actually buy orders. So you have buy orders here all the way up, which means you have massive fuel at this area here. So we saw buyers at this level buying and overcoming the sellers. So the sellers were nowhere to be seen here. They started pushing. They were getting nowhere near closing below the EMA. If it closed below the EMA 21, that would have said, okay, you know what, maybe the guys are in this market. But them suddenly losing the upper hand here and buyers coming in saying that we got the stops out, tells us that buyers are in this market. And it's not difficult to predict what is going to happen next. What we can expect here is probably another. So let's write here. So what could candle 5 be? Candle 5 would probably be a strong bull candle, right? And if we were to predict what candle 6 would be, probably another strong bull candle, right? Because we want to assume that this move is going to keep going. Now, some of you might say, oh, actually, yeah, what if there was a high of day here, or what if there's some other pattern? I think even if there was some sort of like higher level that could act as a resistance area, I think it's fair to assume that given that the sellers have lost the battle here, especially the fact that there was lots of exchange at this area, lots of orders being piling up, and seeing that the range was going, you know, narrow and narrow, this move is likely going to push way up. Okay, so now let's go and see what happened afterwards. And bam, this is what you get, right? This is what you get basically. So as you can see, we pushed here, got these sellers out, right? These sellers that were going down here, we got them out. And just like that, let me put this on. I wanted to put an arrow here. So we got these sellers here, right? And the sellers have failed to win this battle here. Buyers got them, and just like that, we got two strong green candles. So this is a massive engulfing candle, followed by a massive range candle nevertheless, but it's a buy candle. So you can imagine if you'd entered at this level here, right? So if you entered at this level like this, well, imagine and put in a stop loss somewhere. Usually what you could do basically, a stop loss at the second third of this candle, right? Some actually might say, okay, to get a safer entry, you could actually come a bit lower at this level. You might have missed a move, but I think it's always good to have an entry at this level here and basically get the move till where it goes basically, right? So even if you'd waited to get out at the second candle here, the win reward ratio, the win to loss ratio could have been massive, right? Okay, so I hope that sort of like gives you an idea of how you can predict the market direction by focusing on specific patterns, 4 candles patterns. Try to read the market, understand what the buyers did, what the sellers did. That can give you a better understanding of what is going to happen next and can give you an edge over this market. But nevertheless, I think it's a beautiful story to tell. This is one of my favorite moves. When I see those things, honestly, I don't hesitate to try and make an order. But you can see, right? So in hindsight, it looks beautiful like that. But if we were to go back, let me go back for you. This is what we had, right? This is where we started. But it's not difficult to predict that this is what will happen because obviously we closed above these areas. All right, that's enough for today. I hope this was a nice video for you and helps you understand what is happening from the seller side and the buyer side, especially in terms of market auction and break of structures and market structure like that. Thank you very much, and we shall catch up in another video. Bye bye.